Okay, next I want to quickly review the past recommendations on charts, and in this section then I'm going to go back and I'll use my charts, live charts as well, but briefly look at where we are in relation to some of the analysis that were done in the past. I like to be accountable whether things go well or not. As I mentioned before, no method actually wins all the time, and I would like to see this more in the industry, because sometimes, I mean, it's easy to report success. It's certainly less easy to report when the trade do not go in our direction. Now, that said, as I mentioned before, we have the risk-free approach that helps us, not always, but often. It helps us managing our trade. So I will start from, because I spoke about New Zealand dollar, US dollar, Japanese yen, and then again last week. So euro dollar moving to 104. Obviously, that didn't happen. The market started its move lower on the day of and here is the chart, on the day of the no referendum in Italy, and so we saw the jerk move lower, and the market then recovered. So the good thing is that at that point, our position was already risk-free, so we were stopped out, but at break-even. That is the important of trading risk-free, using the risk-free method. The same thing actually has happened to the euro, the New Zealand dollar, US dollar. We're looking for lower targets, and again, the trade was risk-free. The trade actually, we got an extension here, which brought price into the risk-free level. That extension that we traded was lows to lows here, and the market participated at 0.7078, but price well below the risk-free level, and then it just reacted higher, and clearly now it's actually reacting higher and possibly bringing price into all the way into the highs to lows here, and we will see whether that happens in the next section as well. There were other recommendations as well. New Zealand dollar, Singapore dollar, on the other hand, is doing very well, and we anticipate this market breaking previous highs maybe tomorrow, and then bringing price into that 104 for first target. So we are actually on the right, let's say in the right, moving in the right direction here. 104.20 is and was and still is our target here. The dollar index target, I mentioned it was 106.30, and let's look at the dollar index here, which came to trade the next extension long, and this extension long, if it's respected and it coincides to previous highs, with previous highs here, will bring price into 103.20 and possibly 105 here, so helping price into that target that we mentioned, the 106.30. So this is still on. And US dollar, Japanese yen, we mentioned US dollar, Japanese yen, we mentioned one level, the 115.62, and this market is still into this area of potential resistance, and that move is still very possible, and there are only two outcomes here. Either this market continues higher into that level and then it starts the reversal, or this market actually starts the reversal and has maybe already started the reversal here, we don't know, which will bring a price, which could bring, we don't know if that is going to continue, into the next area of support, which is starting at 110.90 and going down into 109 area here. So 200 pips of area where this market can be potentially picked up. We just need to understand whether that area is going to be tested now or is going to be tested after the 115.62 level that was mentioned in the past is going to be tested. Okay, so for accountability here, it's important always to see why we make some recommendations, where those recommendations are going, and most importantly, to make sure and keep in mind that our method is aligned with the kind of expectancy we anticipate from the method itself.